people it would be kind of crazy, but I bought a $4,000 website just now. So I feel pretty good. And just give me 1 second here. Why isn't it? Oh, there we go. How are you guys doing? Give us some time for folks to join. If not, I just get started over here. Nice. You live by your mantra by not being cheap. Just give me 1 second here. Yeah, exactly right. Yeah, so I just the idea came to mind, and I said, you know what? That's a really good domain, and I was like, I gotta buy it in my head, and yeah, it wasn't cheap. No, I won't be sharing just yet. But I think it's really good. Um, because it's tied to like what I try to do is like these Sunday sessions, I want to do it because it's more so for personal growth. And we've been talking about money in this investment club for so many years that I think eventually you learn to see beyond money, like what's truly important. And and then you understand, and because you also develop an understanding of how money is engineered on the back end, right? Where it comes from. And then you start to think about like what's true value, or what are things that are worth buying or doing that again money can't buy, right? Which is like training. So I'm a big fan of like, here every Sunday because it's just you got to do the analytical work. And the more analytical work you put in, then I think your thesis development skills become a lot better. So yeah, that's why I'm pretty jolly this morning. Uh, V says, yes, money is a tool that we all should be able to acquire, but it's not the end, just a means. Yeah, it's not the end. So yeah, I feel pretty excited. I was just folks who are coming in. I was just telling V I bought another .com for $4,000 this morning, and I feel pretty good. I won't be disclosing it just yet, but it's just I'm excited. I'm excited for the next chapter here, right? It's like every year around this time, around October, November, right? It's like when I start to, venture out and think about ideas for next year and like how could I improve like this year and then what's next year going to look like, et cetera, et cetera. So yeah, I bought something really solid. I'm excited to. Yeah, so Praveen, I won't be sharing the name, and also apologies on the text messaging. I have a list of messages I still need to get back to, right? But yeah, I'm trying to. It's hard to prioritize like investment analysis and meetings with startups and et cetera, and support, and then other miscellaneous messages that come through. Uh, V says, what's crazy is that a lot of people focus so much on acquiring wealth at any cost and pay a huge price in terms of relationships and having a clear conscience. Yeah, I agree. I agree. If you guys recall, right, in one of these sessions that we did, I think in the last 3 months, we were going through a report about the internet and the direction of the internet. And I've developed a lot of like, you know, perspectives on how we engage with the internet. Like, is it surprising that we're all kind of just online? Like, we spend majority of our days online, or at least that's what the report was saying across the world. Remember that global internet report that we were reviewing, and it shows like, by in the next 10 years, there's going to be even more people online, more people on, mobile, or more people on the metaverse, et cetera, more people on applications, more people on just the internet in general, right? And so if you understand that's the direction and you think about the business models that you think are worth pursuing, right? Then it pretty much lines up to like, yeah, like I want to acquire more dot coms because dot coms are going to become fewer and fewer, right? So yeah, I'm excited, super excited. But welcome, guys. Welcome to another session on Sunday. We keep the training going, as I always like to say, because it's when else do you do analytical work, right? Hey, good morning, Broth. You gotta put in the analytical work someday in order to, I guess, become better at observing the markets, right? Because like if you think about it, like a lot of traders or whatever investors, like we're just behind a screen all day. It's just how the technology infrastructure evolved, and this is pretty much it right here, right? So I think the vast majority of engagements for when it comes to like investing or trading, it's just you're on a computer, you're online, you're analyzing by yourself. It could get pretty dry and boring. So I think it's a lot better when we do it as a community. But anyways, the other interesting fact, right, besides me buying a $4,000 website this morning, is today is also my 365th investment club meeting. So it's been a whole year of just talking investing, if you think about it. 365 days of talking investing. Sorry, it's just a moment that I should appreciate. It's a milestone, but um, I guess it is what it is. Carry on. Okay, guys, let's get into the markets now. Too much side chatters from me in the first 7 minutes here. Praveen says I need some work on .com. Let me know. We develop an app too. Yes, yes, I definitely know. Um, Major milestone. Yes, indeed. Let's look at the markets right here. So this week was a pretty good week. I mean, I caught some good ones and I caught some not so good ones, right? The not so good one is the one that you see on the screen right here. Because I was thinking this one was going to gap up huge, but it seems like, election volatility and stuff like that is kicking in the markets right now. And so we are seeing a little bit of a yellow light. Not fully red light yet, but I would say it's just volatility in the near term. I still feel bullish all around. But I did try to do calls on Apple, and I was expecting a gap up. Didn't get this one, but that's okay. It wasn't a big position. The ones that really worked out well for me was the theses that we've been talking about, right? So I don't know if you guys recall the mini sessions that we talked about this one right here, but this one gapped up very fantastic, and I sold at the open, and I sold midday on the first day. I didn't get the second day, continuation right here, right? But it was just was it up like I forgot what percentage it was. Was it 40%? I forget. But basically, I should just measure it right here. Basically, this was up. Yeah, it was up 40%. I recall 40 something percent. So when something gaps up 40% in a very short period of time, it's just good to take profit. So I just took it off. I am looking to revisit this one. Give it some time. And there we go again. Baraf drawing on the screen. So I have to clear some annotations right here. Let me see. Clear all drawings. There we go. Okay, cool. Close that out. Perfect. As I was saying, Ivan says, what are your thoughts about Buffett has all-time high an all-time high cash position, not non-farm payrolls declining, indicating a recession. So I'm like, for some reason, I just had trouble reading that. Maybe it's just another Sunday, or I'm just so excited that I just bought a website for $4,000. Like I feel so good about that purchase. I've been thinking about it all weekend, but yeah. Oh, there's Ivan drawing on the screen again. What do I think about it? I mean, uh, um, look, there's going to be a lot of negative news that people all over the internet are going to be talking about and stuff. But at the end of the day, it's like, what did the market say? Like at the end of the day, we all have to come back to the S&P 500 or whatever and just judge what the markets are doing. So I could have an opinion about it, but I think what's better is probably I just communicate to you what is the opinion on the screen right now, or the subjective view on the screen, right? And let me just clear some of the drawings right here. That I think that's better. I mean, yield curve inversion, that thing has been inverted for like 6+ months. Like it's been inverted for like even a whole year. So and markets have just gone up to all-time highs. So to me, it's like it's like I made this mistake of like going in. No, you're okay, Ivan. Don't worry about it. I made a mistake of like just like going in, learning about this and in the beginning and realizing like, yeah, like there's so many people spreading FUD, fear, uncertainty, and doubt, and it captures views, right? It captures attention. It works, right? So, but in the end, it's like after you hear it for like so many cycles in like a decade, you're just like, all right, it's just like you kind of see like what these guys are doing. They're purposefully like spreading fear and stuff like that. And at the end of the day, just read the markets, Ivan. I that's my recommendation or opinion. Like it doesn't matter what anyone says. What the market says is on the screen right here. And right now, Reddit is saying it wants to go up, right? So yes, I could try to forecast like 3, 6 months out, but again, in the end, it's just like the bigger money has the influence, and I'm just going to follow the big money. I think that's just the main indicator overall at this point. What is the big money doing? Um, Lots of comments here. Okay, let me go back a little bit. So, okay, so let me double click on Ivan's question again. So, what are my thoughts about Buffett having all-time high in cash position? He probably just doesn't see like a nice, Warren Buffett style type of investment besides like Apple, right? Apple was like 30% of his portfolio. So to me, that doesn't mean anything. I think he's just being very picky, and he'll just hold high levels of cash. And and also like some of his positions are also paying him dividends. So uh, I've heard that narrative of like Warren Buffett holding high cash for like a year plus. Did it do anything to the markets? Right? I don't know. I didn't see any changes. Markets still move as it moves, right? The pandemic, however, that was like global consensus. So that was different. So I don't think Warren Buffett's positioning means anything besides him being picky on what he's really looking for, and he knows where he wins, I guess, from the many years that he's been participating. Non-farm payrolls declining, indicating a recession. Sure. I mean, I that all the economic indicators are just all lagged. Like I track them. I've been tracking them for a while and seeing how it influenced the markets, and I've just come to conclusion like it also doesn't matter. What matters is like the price in front of you. Because like it'll just tell you right there. Like it matters when it matters, and when it matters is when the price tells you. If that makes sense. Interesting note about Buffett. Evan says, let's see. Evan also says, worry if Kamala wins and she decides tax unrealized capital gains. Yeah, I mean that'd be yeah. On gains of portfolios of $100 million or more. Well, uh, we'll find out. We're gonna find out soon, right? Okay, so speaking of the markets, right? So I think the markets for the most part it did well in the first half. Second half started to sell off a little bit. So I am concerned moving into next week, but I'm guessing it's just like election volatility and stuff like that. What can we do, right? So what would I call it? I think yeah, get defensive next week, but I still think this market could go higher. If it doesn't, then yeah, we flip the other direction. Now, in terms of plays, I was hoping Apple would do really well because Apple would have carried up the rest of the markets, but now we don't really have market leaders hitting all-time highs. Like even Facebook's pulling back a little bit, right? So because of that, the nature of the markets, I definitely think it's like just a yellow light. Now, selective plays, the ones that I did do well on this week, I mean, definitely Reddit, right? Reddit, we talked about the narrative, how they have way more, was it daily or monthly active users than the amount of shares outstanding, right? The shares outstanding that they have is 74 million shares, and they got like what, 300 million monthly active users. So there's way more people who know about Reddit, the product, than the amount of shares, right? So I think that could act as tailwind. What else? We also know that a lot of generative AI, right, is probably paying this company to basically train their models, and that's going to be important as well, right? It just goes to show like data gravities are very important. And this is a fresh self stock, right, that basically hit new highs right there at the $80 mark, right? Around 80, it started trading to new highs, and then earnings it gapped up 40%. Look, I'm not always going to be right on earnings, right? I was wrong on Apple, but I was right on this one. I was also right on Atlassian, which also had earnings. So that was another fantastic one. So I caught two good ones this week, but I also caught a bad one, which was Apple. But Apple didn't do that bad. I had some tiny positions in coin, which was like, because I was thinking like, okay, maybe the Bitcoin narrative is going to run. I thought that was interesting, so I tried to play coin, but seems like Bitcoin narrative isn't ready yet. But I do believe that when the Bitcoin and crypto narrative runs, it's going to really run. So that's why I wanted to just, speculate on coin. It wasn't that big of a position. So I did speculate on this one, Atlassian right here. Like very nice consolidation right there, by the way. And so this one gapped up in favor. Uh, Comments here. Let me scroll up. Broff says later on, can we take a look at this? Supermicro is currently trading at a discount. I use and believe in the strength of their product. Yep. Accounting fraud was wiped out much of last year's AI-driven gains. Given this, do you think the stock has bottomed out or is approaching a key support level? Is it a good buy? Yeah, I definitely know why you're looking at SMCI because it looks cheaper, right? And the mantra in this investment club is like, don't be cheap. When I say don't be cheap, again, this morning I bought a website. I bought another website for $4,000. I wasn't being cheap. I was just like, I want it. I'm gonna get it. So I bought it, right? So it wasn't me being cheap. So this looks attractive probably because it's cheaper, right? It's cheap because, well, you look at from the highs right here, it's all the way down 77%. But if you ask me like, does it look attractive now? You're asking like, hey, can I try to catch this so-called cheap falling knife? That's exactly what you're catching. You're trying to catch a falling knife right now. And you need to, I would say one needs to recognize that this is a falling knife because it's just started its momentum drop, right? The high volume kicking in, the price accelerating downside. If you want to catch that because you think it's cheap, sure. Earnings could probably gap it up, sure. I don't know, but I think from what I'm seeing from the price action, it looks more negative than positive. I wouldn't be interested in this one until the posture gets a lot better above the 200-day moving average, which is around $70 right there, right? So I don't want to play unless I know there's a bigger player willing to buy, and that's like the name of the game. I think the name of the game is that the bigger player always wins. Well, I guess I don't know. Well, from a relative perspective, like they'll help us win. I can't say they always win, but I'd rather play on that side. And right now, I see more distribution than buying. So if you think it's cheap because of dollar value, sure, it's cheaper than before, but it's currently a falling knife. And if you want to catch a falling knife, be my guest. But I wouldn't play that. Yeah, Ivan says SMCI is in stage 4 decline. Stay away from it. Exactly right. It could probably go lower. If anything, I would probably, say it's more of a short play, right? But you are sitting at this bottom of the trend line, which it basically can bounce. But if it bounces, right, where would it bounce to? It probably bounce to the upper part right here. So it would probably bounce like somewhere like in that range right there. Bounce towards the 200-day moving average. It'll probably find resistance at the 200-day moving average. So I don't like this. I don't like this because the trend is down, which basically suggests that all the participation from institutions within this channel right here, they're all basically in a selling trend. So that's where I'm saying over and over, I talk to like a lot of like people, folks that come in, or over the years, I realize like people want to go after cheap, and if you want to go after cheap, well, things are expensive for a reason, and things are cheap for a reason. So it's cheap because people want to get out, and so you're basically just supplying them with capital or liquidity to get out, right? I'd rather buy it when people are buying it, like right here, right? Atlassian has turned the corner. It's been hugging the 200-day moving average right here pretty well, right? And so I said, okay, look, it finally got above the 200-day moving average. I'm going to speculate on earnings, and that one worked out well. I mean, this is also a cheap play, but it's like it's sort of like, okay, I see some buyers, and maybe I'll try it out. It wasn't a big play, but it worked out, right? Reddit's a different story. Like Reddit, I'd rather you engage with it now. I know it's not cheap, but that's where the gains are at, right? So you always pay when you're being cheap. You'll pay with time. But when you're not being cheap, you're not going to pay with time. You're going to pay with like quicker returns, but you're paying a higher price. It's not cheap for a reason. Glad I asked about SMCI. You saved me money. Sure, it could gap up, and then you probably hate me too, right? But just know that markets could go in all directions. But it's just that if I could communicate objectively and honestly to you right now, you need to recognize that the charts are objectively in a downtrend. And if it's in a downtrend like that, well, folks are distributing. Uh, Hold on. Why am I getting a? Give me 1 second right here. Let me just turn off this notification right here because it's kind of annoying. Uh, like a dog alarm right here. Okay, perfect. Sorry about that, folks. But yeah, like this is something that you just gotta again pay more attention to what's on the screen, not what's in your head, right? Like like I've been saying, oh, like economic recessions, payroll number, this and that. Like sure, people post that on the internet to get followers. I'll probably do that as well, right? Now I'm realizing like if you realize the mechanics to get followers, like just feed into it, right? Like it's kind of weird, but like it's just how business kind of works on the internet. And if you look at like I was just talking to one of my one of my friends that I know, he's an engineer, and I was just saying like how savage these social media algorithms are, because all they do all day is like to like majority of us men, like as every time I go on there, you like in this day and age, as a man, I feel you need to like have hyper discipline more than ever, because the social media algorithms are constantly just pushing like OnlyFans entrepreneurs, content to us, which is like it's ridiculous, right? And it's just like it's like the more I look at it, it's like how does this bring me to where I want to go? It's just like over feeding us on like entertainment or whatever value. It's too much. So you gotta learn to fight back, and that's what I'm thinking. Like it's just even with like if you just look at Facebook in its asset portfolio, everything from like Instagram and how it's like building out threads and stuff like that. It's just like it's going towards like, yeah, like this is how people are selling. It's just feeding into emotions like fear, uncertainty, doubt, or even like feeding into people's pleasures and stuff like that. It's ridiculous. But what I view is like, look, like you could watch that stuff all day and but it's not going to take you anywhere. After some point, you have to do the analytical work. And this is the analytical work that we're doing right here. At some point, you have to deal with the reality that, hey, your portfolio is going down. How are we going to deal with it, right? So that's what I'm trying to promote. I'm promoting more like we got to practice, 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 and stay away from things that are robbing us of like our time in life, which is like, everything from like really like savage, social media algorithms to or hyper processed foods and stuff like that. Uh, Evan says SMCI was pretty great earlier this year, though. Didn't Case Friend make? Yeah, he did. He did. That's what I'm saying. Like, okay, let's go back. Oh, we were on it, but if we look at SMCI earlier this year, right? Like that's why I'm learning now is that a stock will have a period, and that arrow was basically where Daniel bought in, right? And the guy was over like I forget now, like 350K in just like the first quarter of the year, whatever, right? But basically, when a stock really runs, it goes through a cool down period, right? So this thing was up like 300% in the first quarter of the year. So you know that if it starts to top out the rest of the year, it's going to be like basically like not performing, right? So now it's down like 80%. And then people are thinking like, oh, but it was doing so well at the beginning of the year. Now I want to get in because it's cheaper. But that's actually where you get destroyed, right? The best time to get in was actually over here. This was the best time to get in because it's monkey see, monkey do. Obviously, the monkey sees that the stock is going up, so the monkey will get in, right? Don't be the bell curve meme. We'll pull up the bell curve meme just to remind everybody, right? It's this it's a fantastic bell curve meme. And this is it right here. Don't be the guy or girl in the middle, right? Which is basically, all right, let me see, which is basically, like this, like the people okay, you guys let me know if you feel like this is a correct analysis, because it is an assumption, right? And this is what I think the people who are actually successful out there are on the tail ends of this bell curve right here. For example, like when NFT's gone up, right? The people who didn't make money were like, it doesn't make sense. But then the people who did make money were people who were like, oh, I'm just going to buy NFTs. And then the other people who were just like, the market wants to go up, then it's going to go up. Try to be on the sides right here. Don't be the person in the middle. Don't be the emotional person in the middle because it just doesn't take you anywhere, right? Like, don't be like, oh, there's this economic, indicator that's recession, right? Yield curve inversion. Oh, just be like, oh, markets are going up, so I'm just going to buy it and it's going to go up. Or markets are going up, so markets are going up. That's pretty much it, right? Do not. I was in this middle part for the longest time, but now it's like don't be cheap, right? It's just like you just know how it is. Markets go up because they want to go up. Don't be cheap. So, but over here it's like, oh, Bitcoin $20,000 is too expensive for me. Boom, $69,000. That's what you get for being cheap, right? Or oh, like I remember there's this one guy in this investment club right here. I don't know if he's probably listening to it. His name's Sunil. He probably hate me for bringing out his name, but I remember the oil scenario. Remember that one cycle where during the pandemic where oil went to zero or whatever, right? Oil futures or something like that. And then these guys jump in thinking like, oh dang, oil's down like 90%, right? I'm buying at the bottom, and then it went negative. Wasn't that was hilarious? It went negative, right? Whatever happened that time, I forget now. But I remember. I was just like, damn. So the lesson is, don't be cheap. Like if you're gonna be cheap, then that's what's gonna happen. So yeah, like this is a sample. This is a great example of don't be cheap and the trend is down. I'd rather if the trend was up at least like right here, then yeah, I'd probably consider right there. Because now there's monkey see, monkey do confirmation, right? There's confirmation that it's above the 200-day moving average. Like it has communicated to other people to come on in. You get it? That's why I pay attention to what the markets are saying. Like stop playing in our, we gotta stop playing in our heads, me myself included. Stop saying like, oh, but it's gonna go this way. No, it goes when it goes. It's what I've ultimately learned. And I think that's truly the best approach to go about it. So right now, what's going up right now, right? So Reddit's going up. So I sold the initial earnings gap up at the open, and then it went up a little bit more during afternoon. And I sold everything. So I just took everything out, right? I didn't get the second day, right? It's just me not being greedy. I mean, it's like damn, it's like Like, hey, you said don't be cheap, but then don't be greedy at the same time. It's hard, right? But I expect this one to go higher, but it's probably going to go through some consolidation, like somewhere around here, right? It's going to consolidate a bit, and it's going to clear 120 and it's going to move higher. I expect this one to go higher. So I expect this one to go a lot higher, as I was saying in the narrative, right? So this one worked out really well, right? If you were building a position, as I was over here, you would have been like, really, really well off right now with the earnings, because this was a longer term play, right? So yeah, that's Reddit right there. The other one is, well, I do want to look at the top, like the Magnificent Sevens, because there's been a little bit of a change in the marketplace right now. I think going into next week, it just seems like election volatility is actually a narrative that's kicking in. So it's just going to be choppy. I don't think we're going to go down from what I'm seeing. If I pull up the S&P 500, it does look like a short right now. We are breaking a trend line if we try to keep it simple right here. So this is the S&P 500, right? So it breached our first level of risk, which is basically this one right here, the 20-day moving average, which is also in line with this trend line that I drew right here. If I make that trend line a little bit thicker, right, that it breached those levels. So we need to respect our portfolio and our ourselves by considering risk management. So folks, right there, that 20 MA was the first signal to sell or get defensive, right? Now we're on the next one. The next signal to sell is if we don't hold this 50 MA right here. Yeah, we currently bounce, right? But we need to hold here for me to feel really good about the markets. I hope Reddit builds a flag before. Yeah, exactly. I think that's exactly what's going to happen next. It needs to consolidate for a period. Consolidation shows that other players are getting in, and that's just nice confirmation overall, right? But the hard part right now is that you know the environment's kind of getting a little volatile, right? So if we know from prior tests right here, we know that this thing could fake out quite a bit. It could fake out down to the 100-day moving average right here, and it also fakes out at the 50-day moving average. So it could definitely fake out right here, right? It could fake out, and we could even come down to here. So if that's the case, then a lot of stocks are just going to get pummeled in the near term, in the next 30 days, right? Unless we go back above 580, I believe 580 was the breakdown line right here. So if we bounce back up here and hold support, then I think we continue to go higher. So this would be the ideal scenario right here, that I'm looking for in the S&P 500 for the environment to remain really good. That's the ideal scenario. The implied scenario, from what I'm seeing currently, and it could change, right, is maybe this is probably the implied scenario right here. So that's what I'm thinking. So that's the red scenario. If that's the case, then a lot of stocks aren't going to have the tailwinds of the market to really carry it up. But ideally, I'm looking for this scenario here, for the markets to go up. Now we could look at leading indicators like the FANGs, like the market leaders, to get a pulse on like it's going to go up. But we'll just have to monitor. A lot of people hope that is the next meta stock. Which one? Reddit? I mean, if that's the narrative, sure. If that's the narrative of the people, that's what the people believe, then that's what's going to happen, right? So that could be the case. But this is what I'm seeing in the markets. Now, other themes that I was expecting to play out this week but didn't was Coinbase or crypto, right? Crypto genuinely did look bullish, and I did try to trade this one on earnings, but it gapped down against me. So that was just like a lost trade. That's okay, right? We do what we can. So instead of holding the 200-day moving average, we found we have confirmation of resistance right here, and it was a gap down on earnings. So if I could ask you guys a question, what do you think is the next trade the likely probable next best trade on this one? It's probably going to be a little bit more downside, right? So I think in the meantime, this thing is just trapping this broadening wedge right here. So I think we're just going to stay in that range. So we could go lower, or we could just stay at the midpoint of this range right here. So the midpoint is going to be like something like right here. So there's a possibility that we could bounce where we're currently at. That could be the case, but there's no big trade that's really in play yet. So that's the midpoint right here. We could bounce right here and just hang out like that, right? Or the other one is like we start to go down lower and test the bottom part of this right here before we go back. But we're just going to stay in this range right here, until we clear that, which is what I was hoping, right? Until we get a move that if we get something like this right here, that would be fantastic right there, because that's like a reversal right there. But we failed to hold the 200-day moving average right there. So I'm expecting this one to potentially go lower or sideways, right? So the trade didn't work out. Before it looked like this right here. So I was playing and expecting a 20% gap up. So if this thing was going to gap up 20%, it'd be anywhere from like, like right there, right? 10 bars up, around the 260 mark right there. So that was the anticipation, but the result was this right here. So just clean up, move on to the next one. A lot of people, or we are oversold based on McClellan oscillator. Yeah, I see. Those are some things that I do look at, which is like market oscillators, because it's like that's where you take a step back and look at the overall, if you know what I mean. Like the overall is like hey like you're not looking at the oscillator of just like Apple stock, but you're taking a step back to feel the overall environment. Does that make sense? So that's something that one would learn later, I guess, in your journey of analysis or doing analytical workloads in the markets. You learn about what is the overall market doing, right? And as you progress, you go from one stock to now looking at many stocks and looking at the bigger picture. It's the forest for the trees, right? You pay attention to the trees, but you also learn to pay attention to the forest and what's the direction of the forest overall. So McClellan oscillator, right? We are oversold based on the McClellan oscillator, as Ivan says, which is basically this has gone down over here, right? So yes, like typically when we're down, this oversold, the markets have a tendency to bounce. Now on top of the McClellan oscillator, I also pull up the breadth indicators, like the S&P 50 percentage greater than 50-day moving average indicator. I also believe this one works pretty well from just analyzing week over week over week. So I find this to work really well. So as you can see, like it was kind of overbought, but then like now we just cross over, right? So it also says we could go lower, even though we're oversold on the McClellan oscillator, Ivan. So we could definitely go a little bit lower, but I think this is going to be a healthy correction because moving into next year, I think the cat's out of the bag. I think most indices have the intent or implying that we're going to go higher. So that's what I'm seeing. Now Dow Jones, if we pull up Dow Jones over here, it does look kind of bad, right? So this one, it did find support at the 50-day moving average right there, right? But it's kind of bad relative to the other ones, but it's okay. Let's see if we could bounce right here as we did over here and as we somewhat did over here at the 150 MA right here. So let's see if that continues is what I'm looking at. Because technically we zoom out, we still are basically at all-time highs. If we zoom out, it's like it's not actually painful at all. So we can't quite say like, oh, it's really bad, but look, zoom out, and you just have like a much better perspective on things. So, yeah. What happened to Microsoft gapping down? Yeah, so that was another one, right? Because I needed these market leaders to rally for me to feel really confident in the markets, but we didn't get these market leaders rallying. We actually got these market leaders slowing down. So if we pull up Microsoft right here, right? Again, I mean, they outperform on like their cloud revenue and stuff like that. But the markets chose to gap down. While Amazon, it chose to gap up. So this one, I think I mean, this looks bearish, obviously, right? We could bounce up and go down. So a likely scenario could be, oh boy, I got some annotations in the way right here. Let's do this. Let's refresh it. Give me one more second. This one could bounce up a bit, but it's just choppy for now. Again, I need these I'd like to see these recover for things to look better, right? So I need it to go like that. But I mean, what I want is not it's not going to happen. Likely scenario is this is now resistance right here, the 200-day moving average. So we'll likely bounce up and it'll go like that, and that could be a scenario right here, and we'll retest like this low right here. We'll retest that low, and we'll probably retest this low right here. Right, so that could be a scenario. So two areas to look at if we were to go the other direction. But if we go back, then yeah, we probably retest the upper trend line right here. So the next one would be right there, right? So yeah, that could be the case right there. Let's see, we are oversold. Okay, so that's Microsoft. Let's look at the other ones. Netflix is still good though. Netflix I still like. It's still holding up pretty well. But we could pull up these because these had earnings gap down, and we could jump in there and look at the business too, as I'll show you guys. So Meta right here, right? It is a gap down, but it ain't that bad. Like it's not like an overly huge gap down, right? So we're still holding support right there. So to me, I actually think this still looks pretty good. I mean, it's not great, but I think it looks decent. It's not bad. So it could just be, that's what I'm interpreting as it could just be like, election volatility that we're seeing right now. So just hold out. Wait until after next week. Next week it seems like volatility, so just like choppy up and down. But there will be some select plays. There's also Roblox. Roblox is starting to move as well. Lots of interesting stocks. Um, okay, so that's Meta right there. I think support right here. So I think if we hold this support, then it'd be actually a nice near-term play, because the play would be like within this range right here. Like you'll get a range play right here, right? Because if we bounce here at the bottom of this box right here, then we'll probably go to the top right here. We'll run towards the top, or at least the middle part. So if it's the middle part, then that's a nice trade from 566 to 580, and you could just structure your options around there for like a near-term trade. So that could be the case because I expect support right there. Now, if support fails, then you could do some put options right here, right? And that could be a scenario, right, where we retest some of these levels right here. So that's like levels to levels type of near-term trading if you want to do that type of trading. If not, then swing trading is a lot easier because you could just like sit back and wait for the markets to behave, right? So speaking of swing trading, sorry, I'm also looking at this one. Okay, how are you playing earnings? Do you a weekly call? So it depends on which position. Like some like Coinbase was like I think that was like a weekly, less than a weekly. Apple was monthly. Apple was 30 days out, but I was out of the money. And Reddit was I had swings on Reddit. I was already swinging Reddit, so I didn't play that one like weeklies. Coinbase, I think I already talked about it. I play that one weeklies if I said it already, I think. And then Atlassian, I played that one like risky. Like I think I had like a week or two on those, and that one paid out well. So it varies. It varies from like less than 1 week to 1 week to 2 weeks to 3 weeks to 1 month. And then I also have like the 6 months to like March 2025 type of positions. So speaking of March 2025, I have some calls on these March 2025 on Tesla. Strikes are at the money at 260 if I recall, or what? Was it 260? Or maybe it might be like 280 or whatever. But each contract's like 3,500 bucks. So I have some, I guess you say somewhat leaps. They're like however many months that is. It's just March 20. I just chose the March 2025 calls on these because I anticipate these to perform. It did go against me a little bit, but I filled those around this day right here because I thought we would bounce right here, but we didn't bounce. Right? That should have been a stop out, but I have time on it, so I might look at buying more Tesla because I think Tesla could be a mega runner in 2025. I think so. If not, then we go back, right? Because I mean, I'm playing this red trend line right there, as you can see. So I'm playing the idea that this support holds, and we continue, and we're gonna make a mega move. Mega move being something like that. So mega move being something like that, right? Towards the 500 mark. I think so. But if not, then yeah, this is expected selling because there's overhead supply, right? Because this is one of those narrative stocks, right? Where you got you know you got Elon Musk pretty active on the news, and again, I like what I look at now is like how other people influence people. Does that make sense? It's just like what are you promoting, and what you promote is like what are you saying, or what are you transacting, or what are you doing on this planet, right? Like that's what I'm looking at. I'm just observing people now. So it's like, okay, if Elon Musk has the energy to go on stage, right? Looking at his every step, he's going on stage. What is he saying on social media? What is he promoting? He's talking about his rockets, right? Who is he captivating? All right, his audience, like how are his fanboys or fangirls? How are they responding? If it feels cult-like, then I associate that with potential pump in the market. So that's kind of like what I feel like I want to look at now. And then from there, I analyze like, okay, this is how he's influencing the crowd with what he's doing, right? Then I look at what's the big money doing, right? And so I see some buyers trying to hold around this area above that red trend line right there. So I see some fighters, some institutional fighters right here that are trying to hold the line. So I think it's building up a large narrative, right? It's just getting into people's minds, and then people will react when it's too late. People will, like the worst of the worst, will buy at the very top because it's just like so scared of missing out, right? So I think the narratives are building. Um, just like the narratives are building with Reddit, right? I think Reddit is just still at the very beginning of its full potential of what it could run to. But how do you get out? How do you know when to get out? That's the other, that's the also the important thing as well. But yeah, I think this one could be an interesting runner. So I'm betting March 2025 on it, right? Whatever the contract prices are. So we go to options right here. We go to options. I mean, they got options chain in here now, but I don't use this options chain. I use the TD Ameritrade, but or Schwab, I guess you could call it. Uh, we go in here, and I have the expiration in March 2025, right? So there you go. And I, ask their calls. So on average, they're like 3,500. So I bought two. Yeah, I bought half the money then, like right here. I probably bought one of these. I forgot which one, but these are the contracts that I'm holding right here, and I just pay up too. Like if people ask me like, hey, do you do bid or like do you try to limit order sometimes? But I don't care. I just like it. Like I said, like I don't want to be cheap and I'll just buy 35. Like sure, sell it to me for 3,500, right? $35. I'll buy it, which is $3,500 per contract. But I'm playing those. And I expect these to, be in multiples, right? Uh, that's what I'm saying. Like, if you're too focused on being cheap, then I don't think you're focusing on the direction of the trade, right? Like, if you're just like being nitpicky about like, no, I need to save like $20, then you're not really thinking about like where the stock's going. So yeah, I don't know if that helps, Ivan, but that's kind of how I'm viewing it. Right? Check Bitcoin this week is a thrill ride. Election plus FOMC. Yeah, yeah. I think Bitcoin's gonna be very interesting. So we can look at that as well. I was feeling bullish about Bitcoin, but it couldn't really hold 70,000. So now it's kind of like a back out, right? So this is 70,000 right here, or this is Bitcoin right here. There we go. And we were trying to basically break out right here above that line, but we're back here, right? So it's not looking strong. Because ideally, when it breaks out, you want to see follow through with like institutional buyers and stuff like that. If we hold support here, that'd be great actually. But it would have been better if we started rally and then Coinbase gapped up like crazy, like 20%, and which I still believe Coinbase still can. So I think that's something to follow up, right? But I think we just need like another quarter now. Um, so yeah. Yeah, so I think these plays will be fantastic, right? Let's look at Nvidia because we look at Tesla. I want to look at Nvidia, and we could also apply it on the $8,000 indicator here as well, right? So Nvidia, and if Ivan says if Kamala wins, the end of Bitcoin uptrend, Tesla goes down and the market corrects. We need crazy Trump as president. uh, well, I'm not gonna get political, but why do you say it's the end of Bitcoin, right? Bitcoin. I mean, I'm getting tech. I'm not getting political. I'm trying to get technology correct. As far as I know, there are some elite people shooting satellites into space to basically, act as the underlying compute of like the Bitcoin blockchain. So, so that you can't shut it down, as far as I know. So I don't think it's the end of Bitcoin, right? I think that's a very strong opinion. Tesla goes down, maybe. I think it's just onwards. I think either Kamala or Trump wins. I think stock market still goes up. Why do I say that? Because none of that matters because their spending habits are out of control. Like regardless of if Kamala wins or Trump wins, we're still in the same budget deficit. Like tell me how's that going to change, right? Budget deficit, was it outlays? Is it inlays? I forget. Let me just show you real quick because I look at this every month. Receipts, budgets, and outlays. This one right here. Uh, right? Like doesn't matter. Like oh, it's not this one. It doesn't matter. I don't think it matters anyone wins. Like it could be like Elon Musk who wins, or it could be I don't know it could be Biden who wins again. All right, whatever. It could be Biden. Like it could be anyone. But I think the problem is still the problem, which is like we have a national debt and budget deficit problem, and we have a spending problem. Like tell me how they're gonna significantly change all that and not defend the dollar. then I will have an opinion on like, okay, yeah, like yeah, we're going towards like massive like fiscal changes here. But I don't really see. Yeah, I can't pull it up here because I gotta pull it up. I gotta find the link. But like, come on, like realistically, like a sinking ship is a sinking ship. It doesn't matter how fine of a captain takes position, right? Like, it doesn't matter if the captain is, whatever direction the captain swings. A ship that still has the same amount of like water output that's sinking it is still gonna happen. And doesn't matter like at the end of it, you just have to do the same thing, which is like fix the ship. Rearranging the chairs of Titanic, sure, you could rearrange the chairs all you want, slowing down this the outlays, but I think we just have too much of a budget deficit to not print money. I think regardless, it's checkmate for either president that becomes president. What I'm looking at is more financial structural. It's structural to just like what decisions you have, right? So it doesn't matter how you sell the crowd, you're coming into the same sinking ship. So then to me, it's just like monkey games. It's like a circus, right? It's all a show. It's all a show that people want to talk about. So what I realize now, what's good business is to feed into that. It's to feed into consensus. Like, oh, Baraff, like you really believe that, Dogecoin to the moon? Okay, let's do it. Let's bet on it, right? Because I see you're deploying capital. Let's just bet on it, right? Consensus is all right here. Like you believe, and so therefore it becomes real. So, but like if you look at like structurally, like if it's unsustainable, then long term wise it'll collapse. So it's like durable cash flow versus like or durable spending or I mean if it's anything it is called durable spending. It's because they have no choice but to spend on like the budget deficits, right? So I think regardless, like it just automatically makes Bitcoin go up because it's just like you have to print more money to service the economy, either president or whatever president 10 years. It's too big to it's too big not to print money now. I can't see another way. I don't know. You guys tell me your opinion on that. I mean, you guys might get political and say this and that, but I'd say let's just be objective. Like let's just whoever wins, they have the same holes to fill here. Ivan, do you have a comment? You went off mute. Okay, I guess not. Okay, cool. That's my take. Uh, and yeah, like the more I learn about business, it's very, human oriented, right? It's about sensational feelings and stuff like that. And if you could drive that in people, then you could provoke transactions basically. Uh, okay, let's see. From Tesla, we could swing over to all the other stocks. There's plenty of stocks. But which one should we look at? You guys could throw stocks at me anytime. Nvidia, right? So Nvidia replacing what? Intel. Ivan says, K, my point is that the market was pricing a Trump win. If it does not happen, I agree. After a correction, the market will go business as usual. Yeah, yeah. So I have some leaps on Upstart and Affirm as well, because I thought those were gonna play out, but might have to stop out of those soon because it's turning the other direction. So Nvidia, real quick, Nvidia. So we looked at Tesla. We want to look at Nvidia as well. So Nvidia right now, I mean, it also is up 3%. So there are some things that the markets haven't fully priced in yet, but I will like Nvidia above 140, which is basically it's nearing that right here, 139.7 after hours, with the positive news right there. Because I think if anything, maybe I'll place I'll play some. Actually, I probably will. I most likely will play some earnings speculation here on a gap up because I think this one's going to gap up. But I could be wrong. Right? I was wrong with Apple. I was wrong with Coinbase, but I was right with Reddit and right with Atlassian. But that's the name of the game. And the name of the game is like to when you're right, optimize and double up on being right, and then when you're wrong, just minimize the risks as much as possible. So you could be a 40% right at the time, but you manage risk so well that you're okay. You're going to be very okay, actually. Like I said, the guy who made $100 million, he had like a 30% like right 30% right most of the time. So that means he was really good at managing risk, but he took a lot of like attempts, right? So, okay, so Nvidia right here, I mean, pretty straightforward. I mean, I guess I don't like this selling down below 140 right here, but if we can get back up quickly, which we're kind of near, so come Monday if we get back up, then I think things resume, and I think markets are still okay, right? I want to see something like that. Well, come down a little bit more, right? So something like that. I want to see a move like that. Let's look at Upstart. So real quick, Upstart, Affirm, and also PayPal, because they're kind of like in the, the financial services category. Um, these, I mean, I bought some on here, right? These are I think also March 2025, some months out. But I'm anticipating this one to go up. So, but now it's kind of like going against me. The last 2 days, I think I bought on this day right here because I was anticipating, it to go higher. But now that it's against me, I'll probably stop out. But earnings coming up, so maybe not. Maybe I'll just hold because I do expect it to go. That might be the case. Maybe I'll hold a little bit. But let me look at a firm because both of these were on the move, right? So I want to play stocks on the move, not stocks, not stocks on the move falling knife. That one's also on the move, but maybe you can play short on that one, I guess. But Affirm, I still think Affirm looks pretty good, Ivan. I don't know about you, but you also see quite a bit of volume around these areas right here. So that's pretty good right there, right? So yeah, that's what I'm looking at for next week. Uh, Man, yeah. I think I also have 2025 March 2025 on these as well. So these are swing trades for me. This one's still holding the 50-day moving average, and there's been a little bit of nice holding action right here. So I like that, right? I like it when the charts of the market, which come from the results of investors, can confirm that they're trying to hold somewhere. So anywhere you can confirm support and resistance, it's really powerful. So I like this. I like this, and I like the volume that's been accumulated right here, right? So if this one I think performs, then I think it becomes like a symphony play, or like across the different other long tail credit services. So Affirm is also one of the founders of PayPal Mafia, right? So I think this one performs. I think this one performs. I think it's attractive currently, but I'm also open to room for error, right? I love this rounded bottom action right here, and then the little cup and handle right there. So you do have a nice cup and handle essentially, and now you have an extra handle, right? You have like another handle. It's like a cup with two handles. So I think this one could be an awesome runner, right? But just give it time. Give it time. Give it time, and the red flag like would be right here. If it doesn't hold 35, get the heck out. Because it's just that whatever buyer that tried to prop it up has now lost the ability to do that. If we pull up the expensive indicator over here, by the way, I'm going to change my password next week for the investment club. So just an update for you guys there. Next week, different password reminder. This is what it looks like on the expensive indicator right here. So, I mean, it's still technically it's still long, but we got this one red, so a little concerning, but I'll still play. I'll still play it. I think I'm probably just going to hold through my March 2025 calls on these, Ivan, because I want to swing these through. Uh, I like more Affirm than Upstart. Some people has compared to CVNA last year before going to 50 to 250. Yeah, CVNA. I mean, that was the one not to be cheap about. I was amazed with this one. I saw earnings, and this thing is just like gapped up. So this one was very impressive right here, right? Uh, Very much so. Man, I'm so excited. I'm just thinking about the domain I bought. I know I spent $4,000 on it, but like, I think it was worth it. It's gonna be exciting. It's just like it's sort of like a dream, right? A dream to build something that, I don't know, maybe it's not like venture capital. I'm not trying to build a global scale business. I think I'm more attracted to like just cash flow businesses. So yeah, it's just a thought right there. So this one, what do you do? I mean, yeah, so earnings gap up, it pulls back a bit. It's probably going to come down. Maybe it could come down a little bit more. If not, it finds support right here. But it doesn't look like it. It looks like it's probably going to come down to like 220. But I mean, this is one of those where you can't say it was too high. Like, look at this. This is wild. This is so wild. Like, again, these are exercises we need to practice our analytical review on, right? Because like how else are you getting exposure to this many charts in a short period of time? You just have to run through it. It's literally mandatory for everyone that is trying to become a strong observer of the markets, right? If you're looking too casually, then yeah, you're always going to be less hours than someone who is putting in way more hours. So we got to keep studying these lessons, and you'll remember, like I said, like remember that time when that one guy bought oil instruments that he thought was like at the very very rock bottom, but it went negative. How would you be exposed to that experience if you weren't there or lived through it? So there is a mechanism requirement for you to be putting the hours to the screen every week as an investor. The work doesn't end. Even for like the $100 billion fund managers, right? They always have to be listening to the global economy, see what's going on, and see investor positions, et cetera, et cetera. So that's what we do in here every week, folks. So Carvana, let's go on to the next one. What else? Let's look at RBRK because this one's also playing out as very well too. I don't know if you guys are in this one, but this one, I'm still holding on to this one. I didn't, I didn't want to sell. I'm just like, yeah, I want to hold on. So we talked about this one as well, right? We said that this thing gets actionable at 38 or over the high right here. Essentially, it gets actionable right here at 40, really. But it's nice action right here because essentially what you got is, you know, that resistance point right there, right? That later became support right there. Very beautiful. Very, very beautiful. I think this one continues to go, right? Uh, there was one stock that I didn't look at for Ivan. He also wanted to look at C Limited right here. So let's take a look at this one. This one I'm not watching, but if you ask me what I think of it, I mean, still it still looks okay. Not bad, not bad. But earnings coming up. Let me zoom out. I want to get a better perspective. Oh, okay. So also coming up from bottom. So yeah, remember like these bottom pickers, like they get choppy, right? It could go sideways. So speaking of bottom, I also like Roblox. Right? Roblox had earnings and it's starting to move now. So now I like it, right? And people will say, oh, it's too late. This is Roblox right here. Oh, it's too late. It's too high. No, like the buyer has finally got in. There is a buyer now. Uh, see, like Roblox is coming out of stage one. Yeah, exactly. Like there is a buyer now. And for you to say, oh, it's too high, I missed it, shame on you. Like that's you rather buy SMCI, right? Where it's a falling knife. Sure, go for the falling knife. I wouldn't go for the falling. I'd rather I think the probability is better on shorting the falling knife because the falling knife setup or decline is literally confirmation from the social crowd that it wants to go down. But you're trying to be a smart trying to be a smarter investor and be a contrarian, and that's how you get your hand slapped, right? So this one I'm looking at entering this one this week actually. uh I was waiting for a pullback. I mean, we kind of had it like right at the open, right? But I whatever, like just whatever price I can, it doesn't matter, I'll buy it up here as well because I expect it to go higher. It's about, like, I guess in a way it's not being cheap, right? It's like, yeah, I'll pay up for it because I'm expecting this one to move higher. But it could definitely pull back, which if that's not bad too, like a 50% retracement, like to the midpoint, right? If we pull back here that and retest maybe even that 48, that'd be pretty nice too. But I'm expecting this one to go higher. So there are some plays, right? And when I think of Roblox, I think of the other one, Coupon. I don't know why I think of this one. Probably because it's like one of that the Los Altos fund manager. He's very bullish on these two. So very similar, right? So this one's like quietly moving up, which I like. When it's quietly moving up, like SAP, right? It's like no one really talked about SAP, but it's just quiet accumulation. Look at that. It's just quietly, right? For months and months, right here, literally for months and months. Like this thing was just quietly moving up. Very, orderly, right? And orderly can only be done by someone with a lot of money. A lot of money trying to accumulate without, making it too big of an accumulation and not state the obvious. But this is nice right here. This is very nice. So I think the same sort of behavior I'm seeing with Coupang as well, or Coupang, right? Uber, speaking of Toast, it made me think about Uber, right? Let's do Uber real quick because this one's interesting. Like this one was looking good. Like this one was like under accumulation. I could see it. It was like, a buyer was coming in, but then earnings surprised me, right? I mean, not too surprising, but like I thought we were gonna go. So Uber needs more time. But look, we zoom out, right? Uber is basically sitting at all-time highs right here. So I think, if you ask me, I think this is as low as Uber could go before it runs, right? So if that's the case, then risk could be this low right here, $70. Like this is the pullback entry right here. Again, not investment advice. So come next week, I probably do March whatever, right? Let's go to options real quick. And let's go into let's pick out like about approximately 6 months out at the money. So we'll go let's March, or we could do June even, right? Make it even longer, a little bit over 6 months. And Uber at the money right here, I'll probably be looking at this right here, $800 a contract, not bad, right? And I'll at 75 strikes, so I'll be buying these right here, all right? You buy like 10 of them, $800 a contract. Because I expect this one to move back up. Because I mean, what I'm seeing, again, I'm paying. This is me analyzing the markets in real time as I'm looking at charts right here, right? I'm seeing buying activity right here. So, and I'm also seeing support on the 200-day moving average. So that could be like a swing entry right there, right? And then the risk is below 70. Get out. Get out of it if 70 doesn't hold. You have to be picky. Be picky about your risk management more so than your entry. You could be sloppy on your entry. Be picky on risk management. You can be one more time. You could be picky on entry. You cannot be picky on entry, but you can be very picky. You have to be very picky on risk management. That's where you should be picky. Be very picky on getting out, but don't be picky on getting in. If you're picky on getting in, you'll never get in. And if you never get in, you never get the opportunity to learn, because you learn when you get in, which is when you have the opportunity to get in, that's when you learn. That's the opportunity to learn. Right? But like if you're being like cheap, ain't gonna go far. Again, don't be cheap with your relationships. If you're cheap, then people don't want to. They're not gonna want to associate themselves with you, right? But the people who do, right, who are really wealthy, they'll see it. They'll sniff you out. The earnings were good on. Are you talking about Uber or Toast? Because I actually want to see Uber investor relations. All right, let's go in there and let's take a look and let's see. I'm talking about Uber earnings. Yeah. So let's take a look. Let's see how good are we talking about, and let's measure some stuff, right? All we got to do is go in here to the news, right? Click on the news, and it would go down. Right, this is the work that you got to do, right? Uh, this investment club is literally like a gym. It's like gym membership, and it's like you either choose to go to the gym or not, right? Which is like you choose to work out or not. I'm lagging a little bit for some reason. Anyways, so what do we see? We go in here, and I like to go to the highlights right away, and I like to look at revenue. So 22%, right, or 20% year over year, and take home wise, income from operations, right, is up 666 million, right? Let's see, gross book net cash. I want to see how much cash. Uh, Net cash by operating activity, share repurchases. So they're also doing share repurchases right here. Okay, let's just go down. Sometimes I just like looking at the structural view right here. So revenue wise, we know. Uh, so this is where they make their money, right? Most of it is in mobility, which we know, but they have like delivery, which is doing pretty well too, and then also freight, right? Who knew freight? Uber Freight. Going down, I want to go to the balance sheet. Scroll down right here, and you look at cash, right? So this is their total current assets, but what I want to look at is their cash equivalents. So they got about they went from 4.6 to 6.1 billion in cash. So their balance sheet, if we do go to total assets, I mean we got to look at total equity. It is getting bigger right here. So they are becoming more valuable, right? And eventually that equity has to go somewhere, either in our pockets, as investors who get dividends, or back into the business. So value is accruing here, right? It's just the markets have chose to respond the other way, which we will never know why. Maybe someone needs liquidity because they were betting big on Apple and Apple didn't go their way, so they have to liquidate Uber to suffice for Apple, right? I don't know, but it's not a bad gap down, right? We'll disregard the other player, and we see that the price has shot back to the liquidity pool right here, which is around the 200-day moving average. So to me, it's like I want to try right here, and I think it'd be a nice swing trade right here. This is a very nice entry. Again, this is more so on the swing, and then with your risks at $70. So I'll buy those March 2025 or June 2025 contracts. Was it 75 or 70 strikes? 880 a contract, right? And then I'll swing those, and my risk is $70. So, and I just sit on that. I'll sit on that, and if in the next 30 days we come back up, oh, I'm already paid, right? And then in the next another 30 days from there, right? If we go from here and we go back down, but the next 30 days we find there, like the next 90 days, oh, I'm really paid. So it's actually kind of nice because you could play a lot more positions by knowing, just like swing trading. It's like very casual. Um, but yeah, I anticipate this one to go up. Now, if it doesn't, then we just get out right here, right? We get out right here and we let price discover where it wants to go, like SMCI right now, right? SMCI wants to go lower. We need to respect that and let it go to where it wants to go, and focus on not being cheap. This is clearly like downside. Holy moly, right? Oh my gosh, that just looks crazy. You see what I mean? Like it's crazy because like we're basically back where we were right here. Back before, like essentially this thing is now negative on the year. Hold on, wait, let me scroll down. It should be negative, in year to date. Yeah, it's down 8% year to date now. Crazy, right? So imagine like the beauty of trading is that imagine like if you made money here and then you reversed because it's like overextended and then you went short right here. Oh man, gosh, like this is amazing, right? Like that's damn. Like if you made money on the upside and then you had the guts to reverse and say, "Yep, this is first quarter is done. We outperformed 350% or whatever in the first quarter. Now it's time to correct itself." Oh my, at least 50% correction. Oh my God, like, and this is all like like digital gains, digital income essentially. Like that is mouth-watering, but we have to practice, guys. Like we have to practice because like I know where the opportunities are, and because I'm always talking about it here, right? But execution of it is not necessarily easy in every single moment. So, man, if this one slips below, like it could go pretty low from just the look of this right here. But wow, right? Are you guys feeling it? I mean, like we're talking about like a lot of money over here. Like if you capture these moves. But we have to develop comfort with what it looks like to manage, a chart of like 8.2 billion people in the world, right? Because you're playing something that like everyone makes a vote in control, but is not necessarily in control. We're trying to understand the crowd and the mechanics of the markets. And the closer we could get to the mechanics of the markets, the better. The further away we could get from our mind that tricks us, the better. And when our mind says, "Oh, that's cheap, I gotta buy," run far away from yourself. When you say that's cheap or that's expensive, you have to stay close to what the markets are saying, not what whatever election results, this and that. We gotta stay close to what the markets want. It's what I'm focusing a lot more on today, and I think it's just been a lot better that way. Uh, so let's continue, right? Like Palantir is a great example. Palantir is a great example of like it's too high, right? We look at it, we would just say it's too high. But how is it that any one of us knows that, like it's too high? Like how are you on behalf of the AI, software industry able to speak for everyone and say that's too high? Because right now the money speaks and the money is saying that it wants to go higher. We just don't know how high. It's hard. It's very hard. But if you could catch, these waves, I firmly believe it's very lucrative. PLTR earnings are tomorrow, Ivan says, by market close. Yeah. So that could also explain why, we have sell-offs before earnings because maybe someone bought heavy down here and made good money and so they want to get out, right? We have to respect like respect ourselves by respecting what the people in the markets are saying and respect that not everyone has the same entry as you, right? Your entry is someone else's exit. So we have to just respond objectively to what we see on the screen right here, right? And sometimes, you would use additional parameters like looking into, the financial statements of a company like Uber to reinforce your view of like, okay, are institutions coming into this? Is this a balance sheet that's worthy for institutions to dive into this? If it's a balance sheet that's just like, if it's a balance sheet that is just losing value, leadership that is just lying to the employees and the investors and the accountants, right? Or printing more shares, diluting shares, then the stock will have a tendency to go the other way, right? But we need to just routinely practice this over and over to understand what type of scenario of stocks am I running into, and just understanding like, okay, like not every stock is the same. If we play a penny stock, it's just it's a less professional grade of leadership than if we play like a high end stock like Starbucks, which reminds me of leadership. So another swing position I have, right? So I also have these, Ivan. I think these are, I I held these through earnings too, because I was hoping for a gap up, but it didn't gap up. But that's great. It didn't gap up either. I mean, it's still a play for me. It didn't gap down, right? So I held through. But I think Starbucks is going to be one of the top plays for maybe in this next 6 months here, right? If not, then it's going to be a top play for next year because again, it's the CEO, it's a change in CEO, change in leadership, and the price structure is very nice right here, right? You can see that someone's just continuously acquiring right here. So someone believes in the operational expertise of the CEO enough to reflect it in the price action that I see right here, right? Yeah, it's choppy because other players of all sizes want to get out, but it speaks at the end of the day that this is going to be maybe a triple whammy right here, right? This one's probably going to be like a $250 stock. So I know it's $90, but don't be cheap. Again, not this is not investment advice, guys. It's just and that's resistance right there. We have resistance right here. We're moving into resistance, so it's gonna be hard. But that's okay. I think this one's gonna be a runner. Just give it time. It would suck if it could go the other direction too. It could just go like this. Shame on me if it goes like that. It's just like, oh man. But it's okay. I feel positive on this one. But that's a gut feeling, right? You still need to respect. So what if I ask you guys where would you stop out on here? If I ask like Ivan or V or anyone, right? Let's say if you bought in this one today, where's your stop? Where would you guys stop out? 95? Excellent. Excellent. That's a good stop out. 95 is excellent. I like that. I would agree. That's a great price point to stop out. Now, I mean, and the beauty is that we're also past earnings, so there's no risk of a gap down. The only risk here is like, massive like I don't know, like turnover in CEO and then it gaps down. Yeah, that could be a big risk. But the next area to potentially consider is probably down here, right? Which is the 200-day moving average. So these could be buy points right here. But I think this one holds. So 95 is a great, stop. Great, 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 great risk management area right there. And be picky on that, right? So if you choose to get in right here, make sure that you discipline yourself to get out. And then if you don't and you lose money, now you know why. Now we know why. So that's my problem too. I need to respect my stops. Sometimes I'll be like, I got time on these options, and then I hate myself like 6 months later. So yeah, it's hard. It's truly hard, but just gotta find the discipline. Maybe like the more we communicate and just talk about it, it gets better. Ivan says sometimes the algos take the stop down to the support line to shake weak hands. Yeah. I've been putting my stop slightly lower or to have an alert. Yeah. Yeah. It's like like you don't want to disclose your stop, right, to the market so that the market could see it via level 2 market depth. And it could see like, oh, look, like there's some guy right there. But then we're small players at the same time, Ivan. So even then, it's just like I, I don't know. We're not big enough in my view, unless we're playing like penny stocks. V says totally agree that professionals are great at risk management. It's true in the markets and in life as well. Yeah, I think I should have learned risk management way sooner. Because I'm thinking like, how would you teach someone risk management? Like if you were to start off in life again, like as a kid, how do you teach a kid risk management? That's something that give me one second. That's something that's kind of hard. What's this? Yeah. So I don't know. Like V says I sucked at risk management in the markets, so got pounded pretty hard. Yeah, I think like the only way is just to get pounded by the markets. Right? Like the only way is just to like recognize why you've lost. Um, and I think back on it too. Like it's hard to look at the analytics of your trading because it's just like you don't want to admit sometimes like, yeah, that account I did pretty bad. But trust me, like it's about doing the hard work, right? It might be hard to show up here every Sunday, sure, but like I just get it. Like time is gonna pass, and you want to utilize the time in your favor by building up an expertise or practice or relationship, right? Make the most of your time. Versus like everything that, if we work for a company, everything that we do, they own it. They own, essentially the time that you've invested into building the relationship, building the, reputation, building the knowledge. They own all that, which is that's just the nature of like the entity. But yeah, uh, V says poor risk management is like a sledgehammer. You will learn or go broke. Yeah, yeah. That's why I think I said it before, right? Like to me, it's like you can make $1 million in this, but you could also lose it all because like you didn't focus on the most important topic, which is risk management, right? Okay, let's see what the expensive $8,000 indicator is saying about Starbucks. How about that? Let's see what was the screaming buy for Starbucks according to these according to these grandmasters, right? So they're saying buy 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 right here, right? So hey, looks like a buy to me, right? The pros are also saying buy. So that's what the pro system says. Again, not investment advice. What do you think of sound? Let's pull up sound as well. Let's see what the pros think of sound. Let's go in and look at that, right? I did see movement on sound this week, but I didn't want to play it. And good thing I didn't play it because it didn't work out. But maybe maybe on earnings, but I don't know if it's too small of a dollar amount to play options. Um, but this is the point of control, by the way. This is where the price as currently as where the most volume of activity is, and all you have all these buy signals are here. So you see sometimes like these buy signals, yeah, it's a buy, but like it might not play out well. But at the same time, you need to understand what instrument are you bringing to the system. This system is not meant to observe penny stocks like this. So yeah, you're gonna get because you know how the system works, you know their style. Like you could still use it on this, but you know that penny stocks, not penny stocks, but like smaller cap stocks, they just move in a different way. So Oracle 8K indicator, sure. Let's do Oracle ORCL. Look at that. What do you see right there? Yeah, this one's behavior has definitely altered for people who are listening for free. Behavior has definitely altered in either direction. But you can see right here, right, what the indicator is saying. So, yeah. Uh, Man, I'm so excited. Gosh, guys, I'm in a jolly mood today. I bought that domain and I feel really good about it. It's just like it's on my mind. Like it just casually creeps into my mind, but I'm excited to see where the internet all goes next. And I think I have a pretty good thesis about it. And I want, and when you have a thesis, you want to express your opinion. And the way I express it is via, a transaction that I think makes sense. So very much looking forward to it. So Oracle, you saw the indicator. Going on to the next one. I mean, we have a list of stocks I want to look at. We reviewed that one already. So let's follow up on this one, right? Because some of these are like, fresh shelf stuff that could be pretty lucrative. So let's see what this one says. Let it load, let it load, let it load. There you go. So what do you guys think of this one? What do you guys think of Instacart? It's basically at all-time highs. Right? Oh, wrong one. So so from a theory perspective, there is no more overhead supply. That was the all-time highs right there. Let's go to daily, right? My line. Hold on. What was that price? My line is not saving over, but that price would be $43. So $43 is the line. Let's draw that on. $43 is the line. Right there. Oh, I don't have the line. $43. There you go. Boom, boom, boom. That is the point. That's the risk right there, right? That's where, for this to go up, it needs to stay above that. I like Cart. Yeah, I like this one too. And it's not is we're not being cheap. No overhead resistant. Yep. And good EPS expectations. Yep. Let's go double click on that. Let's actually go and look at the balance sheet before they announce, right? We see that, sales are in the billions. Multiplier, this one is cheap actually. It's a 3x multiplier. So this one could actually like, you know, let's measure a gap. Like at most it's like 20%, right? But it could be a 40%. So measuring wise, 20%, right? A 20% gap up, $55. $55 in earnings is on November 12th. We go to options, right? $55 is the 20% gap up. And if we want to speculate, we go in here and we go into it was the 14th, right? I was earning. So this is the day after. And so we go in here. These things right now are just like 20 cents. But hold on, these strikes are 55. So 50 cents right here, right? This is aggressive right here, right? This is like if you want to gamble. But I mean, sometimes I do. This would be the gamble trade right here, right? The day after earnings. One day after earnings, and you're either right and make a lot of money or a good amount of money, or you're wrong. See that's an example of how you could structure a very aggressive bet, right? So earnings is the 12th. I'm sorry. So you actually have 3 days. 3 days after earnings. So yeah, this would be the speculative play, right? And we could go in here. Let me pull up the chart of the options. Hold on, give me 1 second. This is the fun gamble stuff that I like to do from time to time. So this one is cart, and let me pull up the November 15th. November 15th, and we're looking at the 20 cents. So let's see how they've been trading. Give me 1 second. Let me see how they've been trading. So we'll pull this one up right here. All right, not much data. Oh wait, no, that's a 3 minute. Let's do 1 year, 1 day. So it's been like this right here. So these were introduced around here, right? $16 per contract. And now it's currently right here. So it's lower, right? So imagine this. If if these explode to $1, that'd be great, right? From 20 cents to $1, 16 cents to $1. Uh, I just again, it's not a recommendation to gamble, but that would be a gamble trade right there. Right, that's something that I might play, Ivan, for fun. I don't know if you do it, right? You want to throw away like 500 bucks, like just throw 500 bucks, but if you're right, maybe it goes to like, I don't know, $5,000. Who knows? 500 bucks to $5,000, maybe. But that's a sample aggressive trade that one could think about, right? If these go up to like just from 16 cents to like $3 a contract, let's just say $3 a contract. That's like, that's like way out of proportion over here. That's up here. From here to $3. That'd be fantastic. $16 to $300 a contract. Again, that's, I shouldn't say that's not realistic. It's a possibility that could happen, but you got to be like, really know what you're doing here, right? If not, you just be throwing money away. Like, like if you risk less than 1% of your portfolio, like what's wrong? Nothing wrong with that. Like, let's say if you had $100,000 and you're like, yeah, I'm gonna risk like, $500, right? Less than, 0.5%, 0.5% of your net worth. It's kind of fun. It's kind of fun if you hit it right. Like, if you're right, you risk 0.5% and you made 5%. Let's just say you made $5,000 and you made 5% on a point 0.5 risk. Sounds like okay. It's not a bad not a bad risk reward because you're risking point 0.5, but you gotta be willing to lose that point 0.5 for a potential 1% plus gainer. Um, but yeah, that's something if one would like to explore. Let me ask you, would you do it, Ivan? Would you buy these? Would you try it? Testing your, because this is a gamble trade. Like, there's really no backing out. Like, if you're wrong, there's like no one's probably gonna buy the other side. But you're only risking like I don't know. You can even do just $20 for fun, right? Now, if you want to play it more seriously, I would say highly suggest like adding more time to it. So then you would be looking at the June 2025 over here, and in this case, you could do this one, the 50 strikes, and they're only $500 each. I did with SoFi last week, but I lost $40. Yeah, see, like I mean, don't bet so big. But if you were right, it would have been lucrative. It would have been lucrative if you're right. So a more safe level bet would probably be like something like this right here, where like $500, but you are paying higher, but that's fine because you have so much time premium. You have until June of next year, so not a bad not a bad consideration, I would say. Let's look around. Let's keep exploring. This is fun. I like this stuff, and I actually plan to talk more about this stuff moving forward. So did we plan out a Starbucks trade? Let's look at the options chain for Starbucks, right? Because I like Starbucks. I mean, that does sound good right now too. But yeah, I think I like the story, the narrative, and where things are going. Uh, Ivan says, when do you do leaps and stocks? You are a swing trader, not a position trader. Wait, hold on. Why can't I be a position trader? Why can't I be both? I mean, like, startups, investing in startups is basically a position trading, right? Or is that an investor? Right? Position trading is like 1 year and above, I'm guessing, if that's your definition. Swing trading is anywhere from more than 1 day to less than 1 year. I'm guessing, whatever definition you're following. But hey, I mean, I do it all. Position's not bad at all. Uh, but when do you do leaps on stocks? I don't know. It varies. It really varies because it's like I think it's like when you have a high understanding of the nature of the stock, of the potential, then you could mold your contracts around it. And the only way to do that is just to put in analytical work. You have to do this work. Like, it's not an option. So I'm not sure. I'm not sure when I do it. I mean, we could just talk it through as we do it right here. So let's do March or even June, right? I personally like to go when I do longer term trading. Excuse me. When I do longer term trading, I just like to go 3, 6, 9, 12 months. You get it? So we got the March right here or the June. Let's do June, right? That's about it's less than 1 year, right? June, and then right now current price is about $100. Current contracts right here, right? You could do these. I mean, I like to do basically these, right? Like in the money, at the money, slightly out of the money, just one strikes out of the money right here. So like this is like the range I like to buy, right? When I take a position. Uh, doesn't have the Greeks. I thought. Oh, okay, that's why. So you have the Greeks. Sorry. There you go. So ideally, you buy like again whatever deltas you want. So these were yep right here. So these are the deltas, right? So delta at point 0.7 right here. So every dollar goes up, the contracts appreciate 70 cents, right? So I like to go around here, right? That's like my style. Now, sometimes I like to bet. We gotta go back to prices. Sometimes I like to bet. So I'm okay with that too. I think that's kind of fun. You guys should throw me some bet ideas and be like, all right, let's take that. Let's see how it goes. But these are kind of far out, right? These are 145s. Yeah, they're 70 cents, but I don't want to be cheap like that. When you're cheap like this, we go back to the volatility Greeks over here. When you're cheap like that, and look at the delta. The delta right here, when you're far out, it's just like 7 cents a contract. So every dollar it goes up, your contracts are like $7 up. It's not that fun. So that's the problem with being cheap over here in options. Um, but yeah, so yeah, potential trade idea right there. It's not too bad. Going back here, Starbucks. Let's look at the chart. Oh, I clicked on the website. Sure, I might go get some later. I sold myself to getting some later. Stock detail. That's what I wanted to click on. So it really varies, Ivan. Like it varies on what the idea is. Like 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 PayPal would be more like position because it's like very low and it could take years before it could go anywhere. So I do, this is like 1 year plus, right? But then now it's like finally moving, and when a move with overhead supply is gonna be choppy. It's gonna be choppy on its way up, right? Unless it's truly it being a market leader or all-time highs leader, sure. Then you have no overhead supply and could really run. So that's how I've come to navigate like the cost of time with options. Because before I used to like these right here before, I used to actually do like 3 to 6 months and I was wrong. And I asked myself like, why am I wrong? Like, I was right on a direction. It's just I didn't give it enough time. Right? Like Netflix. Like Netflix, like I threw a trade idea to Daniel because you have to constantly formulate trade ideas for yourself, right? And the trade idea on this one at the time was like right at the low, like literally at this right here, like around 220, right? And at the time, 220 looked scary. And at the time at 220, let's go down to 220 at the time. 220. Wait, this is Netflix, right? It went through a period of 220. Oh, so I guess it was that. Because right now, oh no, it's right here. What am I saying? Yeah, this one here. Okay, so 220. So I remember talking to Daniel right here at 220 or here, right? And it was like, I don't know, like I think we were just off on time. And like the trade was right, even down to like 170 if I remember. I think it was like a 170 scenario. Like even though the direction was right, we just didn't get paid out on time. So it was like 30 days or whatever. Maybe it was like 220 strikes from over here, right? But that's what you get for being cheap. So that those option contracts ended up being expired. But I was right on the direction. It eventually did hit the price of like 300. Right now it's like here, but it's just I didn't give enough time. So the lesson that I've learned is like, okay, when you have a stock with overhead supply, you need to give it more time. Versus like a stock that has no overhead supply, then yeah, you could be a little bit cheaper and go with less time. So that was a valuable lesson for me, like very valuable lesson. It's hard too, right? Uh, I am doing leaps or SoFi coupon. I like the coupon idea. Coupon I would consider next week as well. SoFi, let's take a look at SoFi. But Ivan says it's tricky to go into earnings with options. They're too volatile. Yeah, I mean, therefore you could play quarter to quarter. That's one way. But this one SoFi already had earnings. So yeah, I mean this one's harder, right? Wait, hold on, let me zoom out. What was the range on this one? This one went up as high as $30. So I don't know what your strikes are, right, in your expiration, but something like this, again, you gotta have your risk management, right? So if I got in right here, my risk management has to be like for sure here, like $10 at the very minimum, right? I mean, already like if I had a tight one, it'd be $11. Like it'd be this low right here. Like that'd be my tight one, but my hard one that you absolutely have to just get out is like right there, the 10.50 to $10. So that's where I get out. Um, yeah, and ideally it holds 11 right here, $11. Uh, Ideally, I mean, again, time frame wise, I prefer more time on this one, just because it's coming off of a low. So 6 months plus, 6 to 12 months is a nice range, like 9 months. and then try to be right within the 30 days. If you're not right within 30 days, I'd be looking to throw it away as well, right? Like if I guess like if it stalls, it goes sideways for like too long, that's a problem too. So you have to really play these scenarios and learn from experience. That's the thing, I think. The thing is like in the beginning is like we have to develop as many experiences as possible. You guys heard about NVIDIA's Omniverse? It's so fascinating. That reminds me, Omniverse, NVIDIA. Right? And this could go into like our technology talks from time to time when I have them. But I don't know if you guys heard of Omniverse in technology. What am I saying? In NVIDIA. So basically, my understanding of it is it's like a physics virtual world, right? Or a virtual world that represents physics. And basically, you could send robots in here to train. It's like if you ever watched Dragon Ball Z, well, I think only Evan, maybe Evan will understand the Dragon Ball Z analogy, and maybe Jack, I don't know, but yeah. So it's like the virtual time chamber, right? It's like the hyperbolic time chamber. In other words, like the future of robotics, since general robotics is on the rise right now, right? It's a hot narrative out there. So the future is basically before you bring a robot into real world production because it could cause danger to another human being. um, Ivan says Dragon Ball Z off course one day is 1 year when training. Yeah, exactly. Yeah, yeah, exactly. So in other words, like the robot, instead of deploying the robot in real life where you risk real harm to humans, you would deploy the robot in virtual into this omniverse world. And let's just imagine like they train a million times in the omniverse world. So you'll have like physical environments where the robots will walk around and engage in a virtual environment, like a video game, literally like a video game. And then once it's trained enough with that training data, then you deploy it into the real world, and then you have real world data. So the cool thing about that, as I was talking about training with like ourselves, is like I wish I could do that. I wish I could go into like a time chamber where one day is like 1 year of training, right? So it's exactly that right there. Like one day in this omniverse for the robot is probably like a million. It could be like a million times over in training. I don't know, but that's like the concept of it, which is so fascinating because this is basically like the evolution of like a quantitative backtest, right? So like imagine like I don't know like and that's what we got to do for ourselves too. Like when I think about like how large language models are trained, like it has to go through like pre-training, right? So even ourselves, like before you play real money, you want to pre-train yourself as much as possible. But then like a lot of the times, what most people do on average is we're forward testing. We're forward testing meaning like we're testing live with real money and we're learning the hard way live, which is fine too. But like what happens with you if you test live and you lose all your money? Then now you have to take a break from your pre-training or your training, and you have to go earn more money so that you can play again. So there are pauses in your training, versus like if you're always training, like how can you keep the training consistent? So it's really important. It's so important. I think it's the underlying differentiator of like the folks of tomorrow versus like I guess the folks who don't go far tomorrow in the world. I don't know. Like I really truly believe that you have to train because I mean one of these robots, I guess you could say, one of the biggest benefits that they have with technology is that you could upload their brain in a virtual world and they could train a million times over. Versus like if you plug my brain into the Matrix, like Neo, right, and taught me how to have a no kung fu like in the Matrix, yeah, I would definitely have a nosebleed, right? Like if you upload like 20 or 30 years of like kung fu experience in my brain, yeah, without a doubt, I'm pretty sure I'll have a nosebleed, just like in the movies. So yeah, that's really cool, right? How NVIDIA has that, which is the Omniverse. Now that I understand it a little bit more, which is again, it's a virtual world for hyper training of robots and stuff like that, or anything. You could train anything that needs to respond to physics, I'm guessing. Uh, in which case, those GPUs have a very valuable reason, right? So let's look at AMD. I know AMD didn't do well, but that's okay. It's only it's pure. It's AMD is the shadow of NVIDIA. The disregarded child of the family of graphics cards, I guess. Uh, yeah, this one's looking pretty bad, right? It's stuck in this channel right here, this decline channel right there. So boom, Boom, right? There you go. So, and it failed this also this intermediate channel. There's like the longer term channel, and then this intermediate one right here. So boom, boom, right there, right? So it's probably gonna go lower. It has a tendency to go lower already. Uh, what's the trade here? It's either cash or short, right? Short on a bounce. So it could bounce and retest the 50 MA, and then that could be a short right there. That could be the pivot right there. So again, this is by it's not, I didn't make up these rules. It's just it's by definition of the marketplace. This is how the marketplace responds, and I am just simply respecting how price behaves. The moment you disrespect price, geez, disrespect prices, you gotta know what you're doing, right? You gotta actively know like, hey, I'm going against the grain, and you have your reason as to why. But as long as you don't disrespect the normal dynamics of price, then you should be okay, I feel. So I like this one better back above the 200-day moving average. So ideally, we can get back here. That'd be much better. But for now, that's currently where we're at. And as long as we remain below the 200-day moving average, then we risk further downside. It's just the nature of the markets. Let's pull up CrowdStrike. All right, as we review many, as we train with many stocks over and over and over and over and over again, like how you pre-train a large language model. Right? We are pre-training on a Sunday so that we go into live production on a Monday, right? When the markets are live, when the markets are open. Wish I knew these concepts before because in the beginning it was just like, ghetto forward testing and failing with real money instead of realizing like, oh, you could have like, trained for all this. Didn't know that. Learned it the painful way, right? Imagine if like you learned kung fu. It's literally like learning kung fu via real street fights, where you actually sacrifice your real long-term health just to learn martial arts. But that's like the best training right there. That's the fine that's the finest training that you could get, assuming you survive, right? So, would you rather pre-train in the Omniverse and learn kung fu first before you go and do real kung fu in the streets, or you go into straight up into the streets testing? Not even testing, like the real underground, what was it? Fight Club. There you go. So CrowdStrike right here, right? Unless we move above the 200-day moving average, it does not qualify as a long yet, and so it is still below the 200-day moving average as much as I could see right there. So it's below 300. Well, it's just about below 300 right there. So by definition, it's not ready yet, and that could be a resistance point right there. So it could go either way, right? It could pop up to the upside, or it could go continue to the downside. I don't like that type of play because it's just this is. I mean, I like it from time to time, but this one is just like I don't really have a set direction, and it could go either way, and I just have to respond on like the directional pop, right? CrowdStrike. What other ones? Robinhood had earnings, so look at this one. So if the crypto had performed, a lot of these would have really performed, but it didn't. So how do we respond now, right? Right. Look at this. This is beautiful. See how we're back testing here? Well, yeah, we are back testing essentially. We're learning. Look at where it dropped down to, right? Like, are these magical lines? I mean, you got to see it over and over to see that. Look, the lines really do work. We literally landed and sat on the 50-day moving average. So these are levels that really do work. It's by design of the markets, which is a derivative, which derives from the belief of the human beings. In which case, this is a human game, right? Full of emotions that will constantly evolve into a way that is better for the apex player. Hood looks like a good short on a bounce, yeah, with large bearish bar, yeah, on a bounce, I would say so, yes. AVGO. Let's look at. So this one failed to. Semiconductors failed to make a new high, except for Nvidia. Nvidia is performing, but across the board. So this is a failure here, right? So before this, it was looking good. Uh, it was looking bad actually. 1, 2, 3, 4, 5. So we were right here. So it was looking bad last week. It attempted to recover, but it failed, right? So the double top is the resistance point right here. And what I'm looking for, I mean, it needs to hold right here if you're still trying to play it. If it doesn't hold here, then the next risk is over here, right? And then the next risk is over here at the 150 mark. So these are levels I could run down to, but 150 should still hold, I'm guessing. Because yeah, 150 should hold because it's still, within this range right here. That's what I'm looking at. But ideally, I like it to progress higher, right? What we're looking for is progression. Progression is key, right? Like it's like if you want to be successful at investing, you have to invest in someone that is making the discomfort move of progressing forward. If you're investing in another entity that chooses to be easy, how are you moving forward? You get what I'm saying? Like you either invest, which is doing the hard thing, and you're investing in someone that you know is willing to do the hard things, in which case their hard things multiply over many times. It has to be hard, and you have to look for the players that are doing the hard work. So it's sort of like the answer, right? Like you got in order to perform, and we have to find it in ourselves to do the hard work as well. It's just this. That's just how it works. If you made money, or if I don't know, if you're successful via the easy path, hey, tell me more. Like, tell me, did it happen overnight after a decade of work? Like, tell me how easy it was. Like, or like, how did you make the path easy? I don't believe it at this point. It has to be hard. And this is just, putting in the genuine hours here. So that's AVGO. Ivan says, but Hood closed above the 50 MA. It did close above the 50 MA, which suggests that it could bounce right there. But remember, sometimes it's not always perfect, right? It could be a sloppy close, above or under 50 MA, et cetera, et cetera. But yeah, this is AVG over here. Let's look at Hood one more time. Let me just look at that. It sat on the 50 MA, closed above the 50 MA, which suggests that it could be a near-term bounce because of an oversold nature, right? So you could say it looked like a good short, but not yet, because I definitely think it could bounce because this decline was like, an 18% decline, right? So typically a decline like this, right? Obviously the buyer comes in right here. It's a nice dip buy, so it could retrace like that, and then it'll do something like that. That would be the ideal or the likely scenario. But if crypto starts to perform, I think this one's sensitive to crypto. Same thing with Square, right? So we want to go there again, practice looking at these different securities here. Uh, Ivan says, well, I expect that due to fear of missing out, some more volatility. Yeah, that could be the case. I mean, like again, lightning strikes when volume grows really big on a big drop or big, gap up, right? That's when lightning strikes. And so, FOMC, yeah. Next week is like a double whammy, right? Elections and FOMC. So that's why I'm thinking next week's gonna be like just chill, relax. Let's let the markets decide. But I think ultimately the markets decide higher. I think the markets have already decided to go higher. So we'll just have to observe next week and see what happens. I got a message here. Okay, perfect, perfect, perfect. Guys, I'm so excited. Okay, so Square, we didn't talk about Square yet. Square has earnings coming up. Now, why am I looking at Square? Does anyone know why I'm looking at Square? Look at this chart right here. Does anyone know why I'm looking at Square? This is a wild chart, by the way. It's a wild roller coaster. What do you guys think of Square? I'd love to pick your guys' brains on this. Square, if you don't know, it's let's look at the fundamentals real quick. 44 billion, not profitable in this year, but profitable here. Sales are going up, 21 billion in sales. Dang, that is 22 billion in sales. And only two times multiplier. Margin wise, it's a traditional type of business, right? Or it's like very low margin, 34% margin right here, right? And then take home 3.5%, but it's profitable, right? And we want to go in here and let's look at the financial statements. So we go in here. Oh wow, they got this insider trading volume. I didn't see this one last time. This is actually pretty nice. Let's go to the balance sheet. I want to see if there's balance sheet growth. Right? We go to total shareholder equity right here. Yes, absolutely. In the last 2 years, there's been a lot of balance sheet growth. My gosh, that's a lot of balance sheet growth. All right, let's actually do a little bit more double click here. Let's go over here and let's look at Square. right? Let's understand what are they holding that is of value. Because this one, we go to, I actually want to go to interactive chart and also want to go to ownership. Because again, this one has to do with like also Bitcoin, right? Because it seems like they got a lot of cash, but let's take a closer look. Square right here, let's bring it over here. And total cash wise, they got about, as of recently on here, it's 6.6 billion in cash. Right, that's a lot of cash. I mean, it's a decent amount of cash. Ownership wise, let's see. So the biggest owner, okay, Vanguard obviously, yeah, these guys are everywhere, but total AUM, high conviction owners. The highest conviction owner is this one right here, Nico Asset Management. And then over here, we have the Cash App lead, which is Brian right there. Not, the amount of shares they have is not that big. It is 500,000 shares versus this one, Vanguard, has, how's that? 40, nope, right there, 45 million shares, right? So these internal folks are very small shareholders. You see how like how an entity benefits from eternalness, right? Infinite living, thanks to the just the people holding up entities to be alive. We create these brands to be alive forever. That's the intention. At least that's the implied from the behaviors of the human race, I would say, right? We create an entity because we ourselves cannot have a business that goes on forever. Like Kay, myself, I cannot teach this investment club forever. After some point, I gotta retire, and I gotta go rest, ben, beneath the dirt, knock on wood, right? Eventually, right? Eventually. But the learning has been amazing, I would say. But in order for your entity to survive and be a 100-year-old entity, you have to become a company. And the definition of a company is a group of people who are organized, right? A business or a company is an organized group of people targeting a market, in which case a market is an unorganized group of people. That is basically it right there. And that organized group of people, we want it to be an entity, and to associate its value to investors who could buy the shares. In which case, when we enable share ownership, we unlock unlimited life potential to an entity, but we also create a value mechanism called finance and the share, which creates shares so that other folks of different age or typically older age can own and benefit economically. Isn't that wild how we generate all this? It's pretty cool. It's pretty cool when you just kind of like see it over and over. What was I going to do in here? I was going to look at the balance sheet value, and I wanted to confirm that. So what I'm going to go in is I'm going to go to the balance sheet right here, and I'm going to scroll down, and I'm going to click on the total shareholder equity value. And I just want to see over the last, yeah. So it looks like basically 2022, they went from a balance sheet value of like 3 billion total equity value, damn, and made a lot of money in just like this. What period was this? 2021, or basically all of 2022. Yeah, so they made a lot of value in 2022, balance sheet value, because that balance sheet went from, look at, oh my gosh, look at the price too. Look, oh my gosh. You guys see that? I was like disregarding the blue right there. Let me show you. They gain more value on their balance sheet than ever. There we go. They gain more balance sheet value than ever, right? The green represents their balance sheet value from 3 billion to 18 billion in total equity value. That's basically assets minus liabilities equals total equity, right? Assets minus liabilities are here, right? And in which case the stock went from this to this. It went from 300-ish to 72. You guys tell me what's going on here. In the biggest year, it had the best like value like it's almost like saying you made the most your home appreciated the most. Oh, how do I what's an analogy for this? Have a great week, Evan says. Thanks for the information, everyone. Looks like a yellow light this week. Good luck with your new domain name. Hey, thanks, Evan. That means a lot. I can't wait to play around with it later. I mean, there's not much to play around. It's just I spent money. Now I gotta go build something out of it. But like this is what I'm talking about. Like there's a huge disconnect here. I mean, one could say, but K, there was a huge disconnect during this period. Yes, that's true. Like during this period, it just went up, right? So what does this say? There's valuable lessons to be told here. Is that long-term value is here, short-term perspective, like price. It's basically saying that price is based off of like human emotions, right? It's just collective emotions, and actual balance sheet value, right? It has gone up like crazy. I mean, but I think it's just like the markets were, discounting or bringing the value forward, in which case they were expecting the balance sheets to go. Just like this, maybe this election, right? Like, markets pricing in a Trump win or whatever. I don't know. Like, but this is really fascinating for, and thought provoking for one to think about. So, I do have a call coming in. I wanted to talk to this person, and we are approaching the last 3 minutes here. So, in the next 3 minutes, folks, anything else that you guys want to talk about? I think today was like a very meaningful session. I really enjoyed it, and I definitely, again, today is my 365th lecture, so I've been teaching for like a whole year straight. I don't feel even when I had a pause where I'm like, all right, I'm not going to do this as much anymore. I ended up missing it. So at this point, I've come to realize from an operational perspective, like I just enjoy doing this for fun. Like this is just who I am at this point. Um, so very happy to be here. Like this was an amazing amount of time that we spent together here today to put 2 hours of true analytical work, behind the scenes to just earn a little bit more of a better understanding about the world each day. So hopefully you guys enjoy this. But with the 3 minutes left, feel free to ask any questions. If not, I will just chime in for or talk for a little bit more here. Ivan says time to sit on your hands next week, at least after FOMC meeting. I'll still take some speculative trades. Whatever earnings is coming up next week, I'll probably play that. V says another very good session. Thank you for the weekly training. You're welcome, V. That's what it is after some time, because I see that. I mean, again, like I think we're very blinded in the beginning because like we just want to earn for like just the sake of earning, I guess. But like when you earn and you accomplish like a level or something, I think one will learn eventually. Then you probably fall into complacency, and it's just like you don't do anything. But then like life is like you got to keep going. And so even I don't know, like if you become like 100 millionaire or whatever, does that mean like you're just gonna let go and just just like not care about your diet, not care about the progression of your family, in other dimensions? No, like you still got to keep the lights on in every other aspect that is not about money, which is like keeping your health together, develop, continue to develop your relationships deeper, right? And meet new people. Like it's life still goes on. So I again I would just focus on in this life, like just focus on things that money can't buy, which is the analytical work that I invest into or we invest into every week. Whoever joins me here, it's irreplaceable. Money can't buy that. It's just genuine work that we just put in for ourselves every week versus like the people who get like the easy wins. The easy wins won't last. You can make a million and you could easily lose a million. It's called leverage. Yeah, you can make a million, you can easily lose it. I've experienced such such a feeling before, and I didn't like it, uh, but that I think that's how you learn, right? So you either learn with the pre-training in the dojo, or you go out into the street fights and learn with real street fights. That's up to you. But either way, we'll make it to our destination. All right, guys, it's 12 o'clock. Thanks so much for joining me in another special session today, the 365th Investment Club meeting. Been doing this for a whole year straight, and I definitely think I could still keep going, especially with what I've did recently. So I gotta go play with my new domain now. So enjoy, folks. Thanks so much for joining today, and I look forward to catching you all again next week in another.